Hey guys, it's Alfonso Gomez. Wanted to take a minute and talk to you guys about capital gains tax. Capital gains tax is a tax that you're gonna have to pay when you sell your house. So there's a few exceptions that you don't have to pay capital gains tax. Capital gains, and by the way, before I keep going, I want to make sure you're 100% clear. I am not a CPA, nor am I a tax preparer, tax advisor. I'm giving you information that I've used in my 20 years in real estate, that I know about, that I've heard of, that I've experienced. So I always recommend you consult with your personal tax advisor, CPA, tax preparer.
Hazard reported ahead.
So, with that being said, when you live in a property and it's a place that you're going to be living in, a primary residence, if you live there for 2 years consecutively, or if you live there for 2 years within the last 5 years, you don't have to pay capital gains tax. Now, why is that a big deal here in California? Well, the reason it's a big deal here in California is because let's say you sell your house, and I'm going to make these numbers very, very easy, okay? So let's say you sell your house for $100,000 and you are able to profit, again, I know this is not realistic, prices. Let's say you profit, $25,000 and you sold your house for $100,000. You paid all the cost, your equity, your mortgage balance, and now you profited $25,000. Okay, so if you have to pay capital gains tax, you're going to pay approximately 3.3% to the state of California on top of everything else. So obviously that $25,000 is going to be less. Okay, so that's the state capital gains tax. Now, on the amount that you profited, let's say it was $20,000 now, right? On the amount that you profited, you're going to have to pay approximately 15% of your profit to the federal government. Okay, so there's two capital gains tax. State, 3.3% of the purchase price when you sell, comes right out of your proceeds, and then approximately 15% of your profits to the federal government. Okay, so that's done when you do your taxes for the year and whatnot. Okay, so how do you avoid this? Well, the way you avoid it is you either live in the property for 2 years consecutively as a primary residence, or you live in the property for 2 years in the last 5 years, and then you can avoid the capital gains tax, property tax that they call. Okay, so another way that you can, another penalty that you can have is if you sell your house. Let's say you lived in your house for 20 years. You sell it for $300,000. You profit, $100,000. You've lived there for 20 years, so you're not going to pay capital gains tax, except if you are a single individual, you're not married. The first $250,000, you don't have to pay capital gains tax. Anything above $250,000, you're going to be exposed to capital gains tax. If you're a married individual, you lived there for 20 years, so more than 2 years or 2 years in the last 5 years, then your protection is up to $500,000. So if you profit more than $500,000, they're going to impose those taxes I just told you about on top of anything above $500,000. So that's the way it works, guys. If you buy a house and sell it within 1 year, you are going to pay capital gains tax. If you buy a house and sell it in 10 years and you're a single individual and you profit $300,000, you're going to get $50,000 of that is going to be exposed to the capital gains tax. So check with your tax advisor, but in the big picture, that's what you have to pay in capital gains, and that's the way it works. I hope that helps. I hope you learned something today. If you ever need to buy or sell, I can absolutely help you. Alfonso Gomez, your realtor. Looking forward to working with you next. Take care.